Hello everyone, welcome again. In this lesson we will look at the question, as I said in the previous lecture as well. So we will look at the question which we will do now, and which will test our understanding about the pensions, and also the topic which we have recently seen in our previous video, which was about resident status of individuals. So who shall pay tax and the resident status and remittance charges and all that. Alright, now I want you to open the practice and revision kit and come to the question number 10 please of BPP exam kit. Now this is a past exam paper. It was examined in June 2013, I think. Yeah, it was examined in June 2013. So it is an actual past paper, but obviously it has been amended by the BPP for us. All right, so it has two parts of this question. So we'll do full question this time, and it is 20-mark question. Now, although that we have studied the pensions and we know what the pension are, there are two types of pension. One is personal pension and the one is occupational pension. Then we know that there is a certain limit up to which we can contribute in our pension fund. So our current tax year and previous two tax years as well, that limit, that annual allowance is £40,000, isn't it? You remember? And the year before that, it is £50,000 per annum, obviously. And another good thing was that if you haven't used your full allowance this year, you can use it in the future years. So if I have exceeded the limit this year, then I can use the annual allowance which I have remained in the previous three tax years, right? So that was benefit as well. Now on top of that, if I still exceeded the limit, if I have used my own current year's annual allowance, and I have used the previous year as well, and the previous year and the year before that, so if I've used all of these allowances and still I am exceeding that limit, still I have too much contribution, then that excess contribution will be taxed as non-savings income. We all know that as well. All right. Now another thing that we have studied in our this current tax year, it was tapered annual allowance in chapter number 2. Now tapered annual allowance says to us that your annual allowance, which is normal annual allowance for our current tax year, is £40,000, and remember we will only taper the annual allowance in our 16-17 current tax year and the future tax years. It won't apply to the previous tax years, so it will only be for our current tax year and the future tax years. It won't apply to any previous tax years. So tapered annual allowance simply means that your annual allowance will be reduced if you are too rich, right? So the rich criteria was over £150,000. Excuse me. So if you've if your adjusted income is over £150,000, then for every £2 in excess of £150,000, your annual allowance will be reduced by £1. Right? Now I'm talking about adjusted income. Do not confuse it with adjusted net income, which we have seen in our income tax in our very first chapter, while we made the income tax pro forma, you remember. So that was adjusted net income. In our income tax pro forma, when we took the net income and then in our workings we made the adjusted net income. Why we did that? Because we needed to figure out that whether we will be eligible for full personal allowance or the reduced personal allowance. Right? So that was the reason we calculated the adjusted net income. Now how did we calculate adjusted net income? We took the net income from our income tax pro forma. We took the net income before personal allowance. Now the income before personal allowance is called net income. So we took the income before personal allowance, and then we deducted personal pension contribution out of that, and that was our adjusted net income. Now if our adjusted net income was in excess of £100,000, then we will get the reduced personal allowance. If it is less than £100,000, then we will get the full personal allowance. So that was adjusted net income. In here, in pension, I'm talking about adjusted income. It is not adjusted net income, it is adjusted income. Alright, now what is adjusted income? I'll just tell you in a minute now. So we're talking about adjusted income for our pension purposes, pension annual allowance purposes basically. So that is adjusted income. So adjusted income simply means we take our net income, which will be from our income tax pro forma. So it will be net income plus if employee has contributed towards the occupational pension scheme, remember there are two schemes. One is occupational pension scheme with the employer, where employee will contribute, employer can contribute. All right. So if an employee has contributed in his occupational pension scheme, that amount, so we'll add that amount. So employees contribution in occupational pension scheme. I'll just write it down as OPS. It is occupational pension scheme. Please write down full form. So I've just tried to save my time. So net income plus, net income is, we'll take it from our income tax pro forma. So net income plus employees contribution in occupational pension scheme. Right. So if an employee has contributed in his occupational pension scheme, that will be added in there. What we also need to add is if employer has paid. So if employer has paid employer's contribution in both personal pension contribution and occupational pension contribution, or occupational pension scheme, I will just write it down as occupational pension contribution. So here as well, occupational pension contribution instead of scheme. All right. So that is the way to calculate adjusted income. So we'll take net income from our income tax pro forma. We'll add employees. If I am an employee of Accountancy Tube, if my employer Accountancy Tube makes my pension with occupational pension scheme, then I will pay to my employer, or my employer will deduct out of my salary, but I am paying it. So my net income plus my contribution towards occupational pension scheme plus my employer Accountancy Tube's contribution in either personal pension contribution. I'm talking about my personal pension contribution, but my employer is paying, right? Because it's employer's contribution. So employer's contribution in both personal pension contribution of myself, employee, and occupational pension scheme of myself. All right. So occupational pension contribution is coming in both of these, but remember that occupational pension, I can contribute in occupational pension scheme, but my employer can contribute as well. I can contribute in my personal pension contribution, but my employer can do as well. So whoever wants to contribute can contribute in my pension, right? So what I will do, I will take my net income plus whatever I have contributed in my occupational pension scheme. I'm not talking about my personal pension. I'm talking about my contribution towards my occupational pension scheme, plus my employer's contribution, plus my employer's contribution towards my occupational pension scheme and towards my personal pension contribution. So that is the formula to calculate the adjusted income. All right. So if adjusted income, as we said, is if adjusted income is in excess of £150,000, then we will have to think about whether we need to reduce our personal allowance. So in every £2 in excess of £150,000, our annual allowance will be reduced by £1. Correct? Now this is adjusted income. There is another thing as well in annual allowance calculation of pension. Whether we need to reduce our annual allowance for pension contribution purposes or not. That thing is called threshold income. Threshold income. Now threshold income simply means adjusted net income. Remember, adjusted net income. Adjusted net income. The adjusted net income which we've used to calculate in our chapter number 1. What was the formula? Net income less personal pension contribution. So threshold income simply means adjusted net income, but we have to write down threshold income here because we are doing the pension chapter. So when you write down threshold income, we will know that we are doing the pension question. So we'll take net income less gross amount of personal pension contribution. To be gross personal pension contribution. So that is the formula to calculate threshold income. Now this one is a step number 1, whereas this one is a step number 2. Right? So first what we need to do is we need to calculate the threshold income first. We need to calculate the threshold income first, then we will go to adjusted income. If our threshold income is less than 110k, if it is less than £110,000, if our threshold income is less than £110,000, then our annual allowance will not be reduced. We do not need to go to step number 2. All right. So first we do the step number 1. So we will look at threshold income. So if our threshold income is less than £110,000, we don't need to go to step 2. Say for example, if our threshold income is in excess of £100,000, then we will go to step 2. Now what does the step 2 says? Step 2 says that if adjusted income is in excess of £150,000, then for every £2 in excess of £150,000, annual allowance will be reduced by £1. All right. So that is, it's simple, but many students confuse it, because it is a new topic, so it will be difficult to grasp. So it's easiest way to learn this rule is to learn by steps. So first step is to calculate the threshold income, and if threshold income is less than £110,000, we don't need to go to step 2. However, if it is in excess of £110,000, if it is in excess of £110,000, then we need to go to step number 2. And step number 2, we will say if our adjusted income is in excess of £150,000, for every £2 in excess of £150,000, our annual allowance, which is £40,000, will be reduced by £1 for in excess of £150,000. All right. Now minimum we can reduce, we know that minimum we can reduce our annual allowance is to £10,000. All right. So minimum we will be eligible to annual allowance of £10,000. So if adjusted income is £210,000, then our annual allowance will be then our annual allowance will be £10,000. All right. Now how we do it? It is £210,000. It's simply like 200. Give me 1 second. So £210,000 less £150,000, which is the the limit, and so the balance is going to be £60,000. If I divide 60,000 divided by 2, it is coming as £30,000. All right. So our annual allowance will be reduced by £30,000. Our normal annual allowance is £40,000, and it will be reduced by £30,000. So the remaining one is £10,000. So the minimum we will be eligible. Minimum our annual allowance will be £10,000. It cannot reduce. We cannot reduce it to less than that. Right. So please make sure you write down these steps. So first step is to calculate threshold income, and if our threshold income, if our threshold income is in less than £110,000, we don't need to go to step 2. And however, if it exceeds, then we need to go to step 2 as well. All right. So I'll just quickly share the screen with you, and we will do a little question now, so that we'll just read the question, and then I will try to solve it as well with you. Now, as you can see on your screen, it's question number 10 of the BPP exam kit, and it was examined in June 2013. All right. Now, please, I assume that you have it in front of you. If you have the BPP kit, please make sure you read it. Please read the requirements first, and then read the question. We are doing part A for now, which is relevant to pensions. I think it is part A. Let me see. Yeah, it is part A. So please read the requirement now. As you can see on your screen, it says calculate Shuttle's. Shuttle is a name. So Shuttle's income tax liability for the tax year 16-17. So we have to calculate income tax liability for Shuttle for the tax year 16-17. So I will just cancel the shared screen, because we will do the questionnaire together on the board, so you won't be able to see the question. Please make sure you have the BPP exam kit in front of you while we do this question, so that you can check the information which I asked you to check, because I will be looking from the laptop. So you should have the BPP exam kit in front of you as well. All right. So it says calculate the Shuttle's income tax liability for the tax year 16-17. So we have to calculate the tax liability, and it is worth 8 marks. And in the second case, it says calculate the amount of tax relief obtained by Shuttelle as a consequence of gross personal pension contribution of £120,000 she made on 6th of April 2016. So if she made a gross personal pension contribution of £120,000, what would be the benefit of the gross personal pension contribution? All right. So first we need to do the part A1, and let's read the question. So your firm has been asked to provide advice in Shuttelle in connection with the personal pension contribution and to 3 non-UK domiciled individuals in connection with the remittance basis of taxation for overseas income and gains. So there are 2 parts basically. We'll move to the part B later, but for now we are doing the part A now. So first one, it says personal pension contributions. Shuttelle has been a production director of D Limited since 1st of February 2004. Shuttelle joined a registered pension scheme on 6th of April 2014, and Shuttelle's tax position for the tax year 16-17 only source of income is her remuneration from D Limited, and the salary is £204,000 per annum. And then it says he lived in a house owned by D Limited for a period of time during the tax year 16-17, house provided by D Limited for the Shuttelle's use. Now this is the detail of the house which was provided. So we'll move to the house later, and let's start doing the question, and we will do it on the board now. All right. So first of all, what he is getting is what we need to do is we'll have to read the requirement again. It is Shuttelle's income tax liability. I'll just cancel the share screen so that I can do it on the board. You can see me do it. So it is Shuttelle's income tax liability. First we need to take his salary. So how much is the salary which he's earning? He's earning a salary of £204,000, I think. Let me see it again. It is £204,000. So that is his salary per annum, £204,000. And then what he's getting is a house which was provided by the company. Let me see, house provided by D Limited. So it says that the company purchased for £635,000 and has an annual value of £7,200. Market value of the house was £870,000, so we do not need to do anything with the market value. It is just to confuse yourself, as I said. Excuse me. There was one example as well, I think I showed you, which was in our notes. So we don't need to do anything with the market values. We need to take how much the employer has paid for it, and whether the value is over 75,000 or not. So it is over 75,000 pounds. So we'll just write down accommodation here. So accommodation or the house, and working number 1. So we need to do working 1. So let's write down working 1 here, and it is accommodation. We know that. So in accommodation, what we need to do is we'll have to take the annual value. How much is the annual value? £7,200. So we know that it is £7,200 plus. Hang on, let me see total value. 635,000 was paid, so £635,000 less £75,000 and multiplied by 3%. So whatever the value is, let me do it on the calculator. So it is £635,000 less £75,000 into 3%, 16,800 plus 7,200. So altogether £24,000. Please make sure you redo it. Sometimes I may omit something, or I might do it wrong because I'm not too good on the calculator. So it's £24,000. What we need to do is we need to multiply it by 3 over 12. So it is going to be how much? £24,000 into 3 over 12. It's £6,000. So that is the value which will go into our income tax pro forma. So it is £6,000. All right, because the house was, he only lived in the house for 3 months for our current tax year, although it was provided long ago, but he only lived in the house for, less than a year, only for 3 months. Then it says the house provided by Dean for Shuttelle's use. We have already done that anyway. So let's move to next one. Has he got any other source of income? Has he? No, he hasn't got any. All right, so that is our net income. So net income is going to be how much? Please do it on the calculator. So £210,000, I think. All right. So it is 210,000 pounds. Yep. Yeah, 210,000 pounds. All right. So what we need to do now is we need to figure out that whether he will be eligible for full personal allowance or not. All right. So in order to see that, we need to see we need to calculate the adjusted net income. All right. Now, why we calculate the adjusted net income is because we need to see that whether the person will be eligible for full personal allowance or the reduced personal allowance. So in order to calculate the adjusted net income, let me write down the personal allowance here. So if it would be 0, then we will write down 0, but we need to do the calculations anyway. So working 2 personal allowance. So just to here working 2. So what we need to do is we need to take net income, which is 210,000 pounds, less personal pension contribution. So has he got any personal pension contribution in the question? And just let me see if he's got any personal pension contribution. It says that yeah, for our current tax year, 6th April 2016, he contributed 120,000 pounds. That was his personal pension contribution. So 120,000 pounds is personal pension contribution. So we'll deduct this one out of that. So the remaining amount is going to be how much? 210, 120, 90,000 pounds. Yeah, it is 90,000 pounds, I think. Yeah, 210 less 120. Yeah, 90,000 pounds. So 90,000 pounds is, his adjusted net income. So I'll just write it down, adjusted net income. So we do not need to reduce his personal allowance. So his personal allowance is going to be the normal one, which is 11,000 pounds. So the remaining amount is going to be 199. 210,000 pounds less 11,000 pounds. 199,000 pounds is his, taxable income. All right. Now that is his taxable income. But look at the figure which he has contributed in his personal pension. Right? It looks like that he has contributed in excess of what he should have contributed. For our current tax year, he is only allowed 40,000 pounds, isn't it? But he has contributed 120,000 pounds, which is far more than that. All right. And another thing is that we have to see his net income. His net income looks like it is too much. So we'll have to see that whether he is eligible for full annual allowance of 40,000 pounds or a tapered annual allowance. We'll have to see that as well. All right. So that's what we need to do now. So in order to do that, we'll have to see that how much he has in his allowance, including the previous years as well, and how much he has consumed out of that. Right. So we will do the working 3. So you can do just beneath. Actually, I will do the beneath that as well. So working 3. And so what we need to do is we'll have to see that how much he had in total and how much he had previously as well, if there is any left from previous years as well. So for our current tax year, which is our current tax year is 16-17. So I'll just write down 16-17, and we're doing the annual allowance. So annual allowance. All right. So our current tax years is 40,000 pounds. We know that, but shall we reduce it or not? So we have to do now. So shall we reduce it or not? So first step was to see the threshold income. So if his threshold income is in excess of 110,000 pounds, then we will have to go to step 2 to look at the adjusted income. All right. So let's go to step 1. Step 1 was to calculate the threshold income. Threshold income was simply adjusted net income. So we have calculated the threshold income already anyway. So threshold income is 90,000 pounds, which is less than a threshold income of 110,000 pounds. So we do not need to go to step 2 to see if we need to taper our annual allowance. So we do not need to go to step 2. Although we do not need to go to step 2, but we'll just see how much is his adjusted net income. All right. So his net income was 210,000 pounds. What was the formula to calculate adjusted income? I'm talking about adjusted income for annual allowance purposes. So what was the formula which I've told you at the start of the lecture, which I've noted down here. So what is the formula of the adjusted income? So we'll take net income plus what employee has paid towards occupational pension contribution, plus if employer has paid in any of either occupational pension or the personal pension for the employee. So we'll have to see in the question if anything like this here. We do not need to do anything with the personal pension contribution by employee, so we will ignore these. And after that it says D Limited contributes £4,000 to the scheme in each tax year. So D Limited is contributing 4,000. Excuse me, is contributing £4,000. So what would happen is we'll take net income of £210,000 plus £4,000, which is occupational pension contribution, but it is from employer to the employee, so we'll add that. So £210,000 plus £4,000, it is £214,000, right? So adjusted income is £214,000. We know that if adjusted income is in excess of, if adjusted income is £210,000 or more than that, so the annual allowance will be minimum of £10,000, right? But because his threshold income was less than £110,000, in this case it was £90,000, so we do not need to go to step 2. I've just explained you just to show you how it works, but we do not need to go to step 2, all right, because his threshold income is in less than £110,000, right? So our current tax year, his annual allowance is going to be £40,000, so that's perfectly fine. So what we need to do now is we'll have to see the previous tax year's annual allowance if anything is left from previous year. So in tax year 4-5, he has had £9,000, all right? So he has had £9,000 in tax year 14-15. So for our tax year 14-15, it is £40,000. We know that. So out of £40,000, he has already used £9,000. So the remaining was how much? 9 minus 40, £31,000. So £40,000 less £9,000. So it is going to be £31,000. So that is our remaining from the previous year. Now read the the contribution which the employer is giving to the employee, £4,000. Please read it carefully. It says D Limited contributes £4,000 to the scheme in each tax year, right? So it is saying in each tax year. So when he says in each tax year, it means he is contributing every year. So what I need to do is I will have to deduct that £4,000 as well. So he must have contributed that year too, right? So what I need to do is, so I'll have to do again £40,000 less £9,000 less £4,000. So it is going to be £27,000 instead of £31,000. The reason I'm doing like this is because when I redo it, then you will remember it forever. Because if I just do it straight away, then you will not remember it as good as I do it again by showing you this figure. All right. So that 4,000 was contributed every year. So that is the reason we are doing like this. So we'll have to deduct that as well. So the remaining one for our tax year 14-15, 6th of April 14-15 is £27,000 remains. All right. Now after that, in our next year, which is tax year 15-16, he contributed £38,000. Sorry, he used £38,000. So £38,000 plus £4,000, which he must have contributed that one as well. The total is £42,000, whereas he was allowed £40,000. So less £40,000, it comes to minus £2,000. So we'll have to deduct that one out of this £27,000. So obviously you can deduct it in total because we are doing the total anyway. All right. So for our current tax year, he has contributed £120,000. We know that anyway. So this was allowed. So I'll do this one as well. So for our current tax year, he contributed £120,000 plus £4,000 of that one as well. So altogether, £124,000 in our this year. All right. So that is the amount which he has contributed. So how much is altogether? Let's see. £40,000 was allowed in current tax year. Carry forward was £27,000. We have to deduct £2,000 out of this one, and in our current tax year, he has contributed £124,000, less £124,000. So it is coming as £59,000. All right. So that is the amount which he has exceeded by. So he has exceeded by £59,000. So this £59,000 will also be taxable. So we'll add this one here. Remember that excess pension contribution will be taxable as non-savings income. That is the reason I put it here. So £59,000 is excess pension. Excess pension. All right. So if I make the total of this one, so it is going to be £59,000 plus 199,000 is going to be £258,000. All right. So that is eventually taxable income on which we have to pay tax. While calculating the tax liability, £32,000 is our basic rate band, but it will be extended by the gross amount of personal pension contribution. All right, so the gross amount of personal pension contribution is £120,000. So altogether it is going to be 120, 30, 152. £152,000 is our basic rate band. So up to that we will have to pay tax at the rate of 20%, and the remaining total amount is 258. So 152 will be deducted out of the it is going to be at the basic rate band. So that is our basic rate band is going to be £152,000. So total amount is going to be £258,000, and less £152,000 is already taxed. Remaining amount, whatever it is, 258 less 152, £106,000, and this is going to be taxed at the rate of 40%. So please make sure you calculate these figures. So whatever the total is going to be 3,400, I think, because it is 20%, 3,400, and it is going to be 21,200. Let me do it on the calculator. I'm not genius. £106,000 into 40%, 42,400. And my marker is tired as well. £152,000 into 20% is going to be 3,400, and we will have to add £106,000 into 40%. It's going to be 42,400. So that is our our total tax liability. So 42,400 plus 30,400, 72,800 is going to be our tax liability, right? So that is the amount which we have to pay to our tax authorities. All right. So that was our requirement number one. Part A of the question, and part A1 actually, to be fair with you. Now we look at part B now together. I'll just share the screen again with you so that you can look at the question again. All right. So as you can see on your screen again now, part A2. We've already calculated part A, part A1. That is his, that's what we needed to calculate, is a tax liability, and now we need to do the part A2. Now in part A2 it says calculate the amount of tax relief obtained by Shuttelle as a consequence of gross personal pension contribution of £120,000. So he said, what was the benefit of contributing £120,000 in his personal pension contribution? So simply it means that what was the benefit of contributing £120,000 into his pension contribution? What would happen if he would not, she would not have spent this money in our pension contribution? So we know that we have already calculated the tax liability after considering the personal pension contribution. Now what we can do is we'll do another calculation, we will do another same calculation ignoring the gross personal pension contribution. So obviously, if we ignore the gross personal pension contribution, we know that we will not get this personal allowance, so we won't get any personal allowance at all, and our basic rate band will also be not extended, and so likewise our tax liability is going to be higher. Another benefit is that this is the gross amount, where is it? £120,000. This is the gross amount of the personal pension contribution. So we'll have to take 20% of that as well. That is also, that will also be the benefit. All right. So the net amount is going to be, the excess, the benefit. So what was the benefit of contributing in the pension contribution? So this is the figure with the pension contribution. Another calculation will be without the pension contribution. So you do not need to do everything. So you can simply take the net income, this net income, and you will have to calculate the tax liability on that. And up to £32,000 it is going to be 20%, and above that it is going to be 40%, and like that from the tax rates and allowances section. Alright, so that was part A2. I won't do it with you. You can just do it yourself and then check the answers from the back side of the exam kit. Alright, let's move to part B now, and let's look at requirement number 8. It says in respect of each of 3 individuals. So it tells us information about the 3 individuals, and some of them are UK residents, some of them are resident and domiciled, and some of them are just resident and not domiciled. Alright, so there are 3 individuals, and he says that tell me that if let's read the requirement. So what does it say? Explain whether or not remittance base is available. So it says that tell me that if remittance basis is available or not, and on the assumption that remittance basis is available. When it says remittance basis is available, it means automatically available. We know that if unremitted foreign income is less than £2,000, then it is automatically available. If it is automatically available, one benefit is that we will get the personal allowance, we will get the capital gains annual allowance as well, which is annual exemption for capital gains tax purposes. We will see in our next video. So we will get that as well, and we won't pay any remittance basis charge. So that is the one benefit of that. And if, however, if our unremitted foreign income is not less than £2,000, then we'll have to claim remittance basis if we want to. If we claim remittance basis, then we will have to pay not only remittance basis charge, which is £30,000 or £60,000, depending on how long have you been living in the UK. And not only we have to pay a remittance basis charge, but also we will not get any personal allowance or any annual exemption for capital gains purposes. All right. So there are 3 individuals, and he asks us to tell us. So first is L, N, and the last one is Y. There are 3 individuals, and it says he has been living in the UK since 2006-7 and blah blah. And then one of them has ceased to live in the UK, so he's no longer living in the UK, and the other 2 are still resident. And he tells us the overseas income and how much they have remitted to the UK. So we'll have to deduct out of that, and the remaining amount is going to be unremitted. All right. So likewise, you have to tell him that remittance basis is automatically available or not, and another thing is that remittance basis is available or not, and another thing is that if it says that all of them, assuming that remittance basis is available to all of them, if remittance basis is available to all of them, then tell me, with the reasons, if there will be any remittance basis charge, and that they will have to pay for their overseas income and gains to be taxed on remittance basis. Right. So assuming that remittance basis will be available to them, either automatically or the claim, then tell me that whether they will have to pay any remittance basis charge. So 3 marks for part 1 and 3 marks for the part 2. 4 marks for the part 2. So altogether 7 marks. And in the last 2 marks, it says, give me 2 examples of the things which you bring to the UK and which will be assumed as remittance, excluding money. I told you that if you bring money to the UK, obviously it is remittance, but excluding money, there are a few things if you bring to the UK that will also be regarded as remittance. Like if you buy an asset overseas and you bring that asset to the UK, that is remittance. Like you take services outside the UK and you pay for them from the overseas money, that is also remittance as well. And another thing is that you take a loan in the UK and you use it for your benefit in the UK, and interest on that loan is paid by the money which is overseas. So that will also be regarded as overseas income. So you only need to do two only, so you can do them. All right. So that is end of this question, and let me just go to question number 2 as well. Not only 2, sorry, it's not 2, it's question number 3, please. We've already done a couple of parts of it, part A, 1 and 2, I think. Let's move to part B, and there are 10 marks altogether. And please make sure you do this, it is your homework. Part B, B1 and B2, it is about remittance as well. So first thing is that he says that tell me that in the first requirement it says that tell me if someone is automatically UK resident or not, or about non-residents. Right, so first thing is about automatically residents or non-residents. Then he says that tell me about UK ties as well. So it is about that. And in the second part it asks about the remittance basis. Alright, so it is altogether 10 marks, very easy. Just the knowledge of the notes which you have with you. So just read the notes and then you can easily solve this one. And also have a go at the question which we have just done. Please make sure you redo the questions. Whichever question I am doing in the class, or whichever question I am indicating you to do it, or I am going through with you, please make sure you redo it, because it is your homework. I hope that you know it at this level. I won't be asking you to do that like the kids, so I assume that you are doing it. Alright, so that's it for this video, and in the next video we will start our second topic, which is capital gains tax. So we have finished up with our income tax, which all of you were worried about. So it was a huge topic, but we have finished it. Alright, so I will see you in the next video, and we will start the capital gains tax. Thank you very much, and goodbye.